All right, good afternoon, everybody. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I've got newish positions. I didn't do the afternoon meeting yesterday, and Solar Edge, Chewy, Reddit, which I see I wrote on there twice. And I bought a little bit of this Beyond Meat after hours on the earnings report, which isn't moving too heavily considering that report. Up 10% here right now after an initial pop that was much higher. So watching that one out of the corner of my eye. It seemed like a decent report. I know it's got a massive short float, so we'll see what that thing does. I'm in the Solar Edge. That report looked terrible to me. I'm actually surprised the Solar Edge is not down a lot more on that earnings report, but it's absolutely destroyed into it. So maybe that's the reason why it's holding up. They even upticked it real quick to $25.50 after hours. They upticked it $1.50, but now it's back down as it probably should be. Anything else interesting here after hours? We got Warner Brothers out. Hate that company. It's down. I don't know what they're gonna do. Zillow up on a nice beat. What's Robinhood doing? Robinhood all over the place. No real follow through in either direction. Monthly active users looks like a nice miss on Robinhood on their users. The gamblers aren't gambling in the same way anymore. Get their revenue beat. Alright, so we'll keep an eye on that. None of those names are super exciting names that I think have a more meaningful impact on the market unless you happen to be trading them. Fastly, Upwork, also out. Again, none of them really too exciting there. Alright, so it felt like a big down day, didn't it? But it's because of how big the move was from low to highs. In actuality, we're only down 0.7% on the SPYs, 1.1% on the Qs, 1.23% in the IWM. So, you know, definitely a little bit of a down move here, percentage plus down move for the IWM and the Qs. SPY is down 0.7, but it just felt like so much more than that because of the way that we trended down intraday from highs to low. Again, only down 1%, but we were up really big at one point this morning. The intraday range is massive. Making a high at 5:31, still making highs at 11 a.m. And just between 11 a.m. and the close, it's a $12 down move. Pretty gross. That's the SPYs. Qs, like a $15 intraday down move. Also, you know, Qs are up a lot this morning, pushing 449, and IWM also obviously really big down move. The IWM was relatively weak from the beginning today, it seemed like, but the market's still fairly correlated, as you can see. It seemed in the beginning of the day like the Qs were relatively strong, the IWM was relatively weak, but then once they started selling everything, then they were really selling everything. It seemed like it just was made worse with the auction that took place at 1 o'clock. If you look at the daily chart technicals, though, now, I think this down move makes a lot of sense. And the question is this the pivot high that continues this downtrend and leads to new lows? That's the question. And it certainly doesn't look good. We basically corrected through price primarily, a little bit through time, but through price primarily, to the 80 MA and the SPYs. So if we're going to fail, you know, we got to the lower band of equilibrium, we created a high there, and then we washed all the way down, closing at lows with a nasty negative Maribozu style candlestick. And then that's it. You know, we'll see if we can get follow through to the downside. We're only $8 above that scary Monday morning. But the difference is, if we get back down to those lows over the course of the next couple of days, we won't be as extended as we were at the same price levels. So that's, you know, how trends work, and that can enable us to work down further. It looks like we're even ticking down here a little bit more after hours. So we'll see. The flip side of that is that the ranges are still so big that we were able to go from touching the ADMA on the daily chart for the SPYs and the Qs to closing an extreme extension. Again, all in one day. That's not what you see in a typical market. This market still is having really, really big moves. So that intraday down move, and this is why it felt so brutal intraday. Now here at the close, we are almost $13 extended in the SPYs. Again, $10 is really where it's more extreme as far as extension goes. And for the Qs, we are $15, $16 extended down in the Qs. Also after touching the ADMA. So again, extreme extension. We're below yesterday's low. And the IWM, where $7 is usually that extreme extension zone, we are beyond it. You know, $8.50, $9 here is what I'm seeing. $8.50. So again, we're really extended to the downside. So it's still a balance. It's still a little bit of a juggling act between weak market, knowing that there's forced selling, and the downside extension that makes you want to look for trades in the other way. This was a great opportunity this morning to get out of shorts and begin to build into longs, and that's what we talked about. I felt like I was starting to short the Qs aggressively and early today, and you know, of course, the intraday down move was so big that in hindsight it doesn't seem nearly as early or as aggressive once again as I thought. And I was even like, I gave the meeting the other day about how I felt like where I really made a mistake in the market was back here on August 1st, because I called it perfect with the QQQ. I was like, I think that this rally back is going to be a little bit bigger to the upside than you might expect. I don't think that we're going to just stop at 465 or the ADMA. I think that we're going to overshoot it to the mid 470s. And I remember I felt like I executed there so perfectly with that thought process, but the problem really was that it was too small. So this time I was like, all right, I'll consider starting what I feel is early, and I'll consider, you know, getting bigger quicker than I would otherwise. Just to have that short on the books, and that trade worked great. TQQQ is my best name on the day today. That's what I'm trading in lieu of the Q. I trade the levered Qs. And I traded both sides of it, actually. I traded it short, caught most of the short move today in it, and then I flipped long. Yeah, I say most of the move. The truth of the matter is I'm looking at my chart, I caught half the move. And it seemed like I caught a really big move, but these ranges are just massive. For TQQQ, it looks like I liquidated around 55.50 in TQQQ. I basically liquidated where I saw the Qs getting to $10 plus of extension, which is really what my game plan says. And then I started taking a couple like cute longs, like off this pivot low that made me some money, off this pivot low that made me some money, and then on this trade where we had a really good call out as a team for this bigger break higher when we saw that the market wasn't actually, you know, breaking down as much as we were kind of initially expecting that it would. Beyond all the way down now. Just gonna manage this position. So yeah, I mean, that was pretty much it. I felt like I traded these Qs really well, and yet here I am at the end of the day, you know, back to 100% long exposure because we are back to extreme extension of the downside. Yet I find myself pretty concerned, somewhat echoing Josh's statements into the close, because we're closing at lows after making a pivot high on what could be a day one. This market needs some stabilization, and I kind of feel like some degree of stabilization should come in. Look, again, I understand what I've been preaching about, which is basically there's still a lot of forced sell flows that are out there, and we are in this negative gamma environment, so it just pushes the days much bigger in both directions when they actually occur. So again, it's like on the one hand, I'm like, wow, we're super extended, but on the other hand, at day one, it's kind of an engulfing candle. We closed at lows. We definitely can become more extended to the downside tomorrow. When you consider on Monday, it was one of the most extended to the downside I've ever seen from the way that I measure extension in my entire trading career. So we're just in a really weird, unique, interesting trading environment here, scary at times, and we'll continue to monitor it and see how it plays out, because I can easily see both sides of the coin here. Rest tomorrow would make sense, an inside day tomorrow would make sense, a bounce tomorrow would make sense because of the extension, but guess what else? A sell-off tomorrow would also make sense because it would just be a day 2, and the ranges are so wide, and this market has the capacity to push those directions. So it's like both options here really make a lot of sense to me, which gives me less conviction. The good thing about Monday that helped give me so much conviction wasn't just the extension, but that it was a day 3 on that degree of extension. And I think that day style countdown really matters. I do think that that's impactful. So I don't know. We'll see where we gap tomorrow. We'll create the game plan in the morning, and then we'll follow that game plan to the best of our abilities. And that's pretty much where it's at. As far as a trading perspective goes, I'm still just very, very focused on the index trades more than anything, and having that kind of be the queue up for any individual stock trades that I'm taking for the most part. There were a couple other trades that I took today. I lost money in Micron. I thought that the queues could bounce a little bit further potentially today and could give maybe a couple day more of kind of grind higher action. And then Micron had positive news on the resumption of the buyback. I love a good buyback. I thought that would positively impact it. And Micron was still, really extended at 92.50 when I was first buying it, with the 80 EMA at 97, 21 EMA at 108. So I felt if the market could cooperate, which is definitely an if, that this Micron had the capacity to give me a move $5 to $8 in my favor, and it just totally failed. Obviously, the market helped it to fail. In the beginning of the day today, all our semiconductor type of names were very weak because of SMCI, but AMD was actually trading a little bit better, and Micron off the news was trading a little bit better. So when I was looking for bounces in semiconductors, I was trying to go after AMD and Micron, and I started with a feeler pre-market, which was too small, and then by the time I was getting a little bit bigger after the market opened, this thing just failed, so I lost some money in that trade. I did make a few dollars actually in SMCI, even though I traded it small. Josh and I traded this one really together, which was fun. It was just into this degree of downside extension here at 1040, looking for the bounce trade, basically back to the 80 EMA. It worked out really well. Multiple red candles in a row. A lot of extension on the 5-minute for 1040. Earnings report definitely wasn't good because of the margin, but I felt could have, like the rest of the report was good enough. I thought that this thing could maybe hold in and chop a little bit. So I saw that degree of extension down to these prices. I was like, all right, let's take a shot here in this, 500-ish areas. It's approaching it for the snapback. And the trade worked pretty well. It was just like, again, a, cute little scalpy type of trade. Again, beyond that, just trading the indexes with the trades that I already really discussed, and continuing to kind of manage the swing positions. So that's really all that I've got. I am happy, like always, to do my best to answer any questions that anybody may have. All right. So, any questions that you may have, feel free to put them into the VTF or into YouTube. Have a great night, Mr. William Jones. See you next time. So first here from Dennis. Indices range has been growing the last 3 days. Sorry, one quick second here. Boom. Indices range has been growing the last 3 days. You'd often expect a decrease instead. You have any experience with this type of range expansion? VIX was decreasing in that time as well, but probably really an overshoot on Monday. Yeah, I mean, the VIX is still very elevated. I don't know, Tate, if you can give me an update on the VIX chart just for me to look at real quick while I'm answering. I think that the movement from the indices actually makes a lot of sense here with where the VIX is, and especially Dennis, with the negative gamma environment that we spend so much time talking about. You have to realize that negative gamma increases ranges, it increases outcomes. Right now, when the market goes down 1%, there's an additional forced $2 billion of selling. When the market goes up 1%, there's an additional $2 billion plus worth of buying. So negative gamma increases ranges, and a higher VIX increases ranges. I guess if you're comparing, where the VIX is now here at $28 versus its high on Monday, you got to keep in mind that the VIX move was bigger than the S&P move on Monday because it was really a vol trade more than it was an S&P spot trade. And you also have to keep in mind from a range perspective that the intraday range on Monday might have even been smaller than the intraday range today, as I'm just kind of eyeballing it here. But it's not going to be that way if you include the futures market from Monday, because the futures market, you're not going to have a gap, and then all of a sudden that becomes a much, 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 much bigger, or you might have a gap because it was a Monday. But even with that, it's a much, much bigger intraday range on Monday than what it actually looked like to us between 9:30 and 4. So yeah, I mean, I'm not surprised to see the ranges stay this big. I would like to see them tighten up a little bit personally, because I think that would be part of a healing process for the market. But Josh was talking about it in a different way than I kind of view it, but getting to the same point, which is that these increases in these ranges are scary, and the increases in ranges force additional further selling. So if anything, that continues to be more bearish. If you want this market to become constructive, you actually would want to see these ranges tighten up a little bit further, and then it still won't necessarily create buying from some of the systematic funds, but it'll reduce the degree of selling. And we still can't get a close, even though we've been above it for 2 days in a row, of that SPX 5255 that we've spoken about, which, again, there's still going to be forced selling even with a close above 5255, but it'll be less forced selling than a close below it. So everything here indicates further forced selling from systematic funds, further weakness, further range expansion until it changes. And it should be able to change in time. It's just how much time is actually needed to heal. And we're also still in a period of time here, August, September, that is seasonally weak, where we knew even before this breakdown occurred that there had to be outflows in August. So it's just outflows upon outflows. It's still a positioning problem, I think, broadly for this market. And the question is, after the pull down being so fast, I think maybe even people who are bearish like me would probably tell you that the move down was faster than you might expect. And I would actually expect a fast down move. But when I'm expecting a fast down move, I'm expecting a fast down move like what we saw on July 24th and July 25th, where July 24th was a brutal day. I mean, it was a $9 intraday down move. That's big. Today, for comparison, using this 517 low, which we probably just touched after hours, but today for comparison, that's a $25 range. So, I mean, it's just really, really big. So I'm not surprised to see it, even as the VIX dies down a little bit, just because I think that the VIX exploded by more actually than the S&P sold off. So even as the VIX is coming down a little bit, it's more like normalizing a little bit to probably what these ranges are, and we're still in this negative gamma environment. So I hope that helps. From Ben, thoughts on XLE? XLE was able to trade back up to the 80 MA on the daily, just like the market, and failed back down, just like the market. Maybe with a little bit of relative strength. It's obviously going to move based on the price of oil. There's a chance at a certain point. Are they holding up consumer staples or utilities? A little bit. So there's a chance at a certain point that maybe they hold up energy a little bit better, more like a consumer staple or utility, just because the sector is generally considered to be cheap, fundamentally. But right now, the technicals on XLE don't look good. The technicals on the market don't look good. The technicals on XLE don't look good. It's just a matter of do we have so much downside extension that markets can hold in / bounce? So hope that helps. Ben from Vikas, the indices are moving so much intraday. What do you use to think about turns intraday? Not sure what you mean by turns. Do you mean like market pivots, or like how much I'm turning over my trading book, or I'm not really sure. Pivots. So I think that technicals still work in the same way. It's just that they're working with bigger bars. I think that the trades themselves, though, that I'm taking are still the same. Where I came in and where I took my longs in the queues is just an example. It was just related to how extended we got off the ADMA on the 5, recognizing that because ranges are so big, you need that extension to be even bigger, and like how many bars down in a row it was in the 5-minute and to what level we're trading at. So for me, I'm trading it the exact same way that I would anything else. It really just is based on the technicals. It's just that the moves are bigger, the ranges are bigger. So maybe, like I always say, when ranges become bigger, you typically will need to take less sizing for more space risk, right? Less sizing for more space risk. And that, in turn, makes your dollar risk relatively the same. So more space risk, but also more reward potential. So otherwise, I think the technicals are generally trading the same. From Dennis, FYI, SPY 516 is the upper level of the demand zone that was created on the Monday bounce. This is an area to watch. Thank you, Dennis. For Qs, that area is 432. Okay. What are we doing here after hours? We're dribbling lower. Wow. Yeah, continue to sell here a little bit after hours. 432. This price would also take out some long stops from Monday's lower high at 514.50 SPY.
SMCI just took out the low of the day,
which is 431.50 Qs. All right, thank you, Dennis. SMCI just took out the low of the day. Yeah. Well, it almost closed at the low of the day. I'm seeing.
Yeah, it still had a couple of dollars of cushion, so it just got the low.
Tate giving us some information with VIX over 30. You should expect 2% SPY moves around 1 in 3 sessions, if I'm reading your comment correctly. And we closed a little bit below 30. So really, the VIX makes sense, and that you would need to be paying attention to this VVIX also, because that VVIX was a big clue on this initial VIX move to begin with. You really want, if you want this market to be constructive, to see VVIX lead down towards $100, so we can stop this VIX expansion a little bit further. So it's the stuff you need to be watching right now. From Joshua, hi Derrick. When you look at extension on 5-minute ADMA after a gap up or down, do you include the pre-market action, only the regular session? Only the regular session. I look at pre-market once 9:30 gets here. In between the period in which I end the morning meeting and start to communicate with everyone and share my screen at the open, in those couple of minutes, I'm changing all my charts from showing pre-market action to only showing intraday action. From Tate, if we overshoot your downside target for August, would you be as bearish as you were into the election and cuts? No, I won't be. As a general rule, as we see this market continue to move lower on a percentage basis, I will, as a general rule, become more bullish. And I like the idea, and I've spoken about this in the past, something to keep in mind as we've entered our market correction here. I think it was actually in one of the morning notes that I published this morning. I don't remember which one, but it went into, on average we see, I don't remember the exact numbers, you can look it up yourself. On average we see 3 5% corrections per year, which, what do they call that? I forget what they call the 5% move. 10% a correction, 20% a bear market. I'm blanking on what the 5% is called. But typically, I think that the stat was on an average year, you see three 5% corrections and one 10% correction, and then you get like one bear market. I forget what it was, every 1.7 years or something like that. So this is normal right now. We are in this year's market correction, basically, for the S&P. Basically got there Monday. 9.7% I think is the number. Technically 10% is the correction. I always wish that they would just clip the 10% or whatever so that we just kind of have it out of the way and we can say that we had our correction on the year. But when I start to think about it statistically, and obviously every situation is unique, and every bear market started as a correction, and every crash started as a bear market, every depression started as a bear market. So there is always a sequence where you can go from being down 5% to being down 10, from being down 20 to 10 to 20, 20 to 50. There is always a sequence that can occur there. But I like to remind myself also that from a probability perspective, when I'm looking at a market that is down 10% and has entered into a market correction, is it more likely to see all-time highs next, or is it more likely to see a bear market next? The answer is it's more likely to see all-time highs. So what that does for me as a very general rule, is that the more down we are on a percentage basis, the more I slowly become bullish. And again, I'm saying that kind of in a vacuum. You have to understand what the circumstances of the correction, of the bear market. You want to understand the positioning and the sentiment that's involved with it as well, how washed that is or not washed that is. All that data becomes obviously really important, because again, every situation is unique, so you have to assess it. And it doesn't mean like just because we're down 10% and that means there's a higher probability of all-time highs than a bear market. You need to be prepared for both situations, and you can assess the data and you can assess what created this correction, and you can say, well, based on what brought us down here and where positioning and sentiment is and flow is and the technicals, that I think that there's a higher probability that we bounce, or I think that there's a higher probability that we don't. We continue to sell, and that can also become part of the kind of the general thesis. So we'll see as everything comes. You don't have to always take it on a day-to-day basis, but at the same time, I would say that very generally, the lower that we go, generally the more bullish I become, as markets just become cheaper unless you see a real deterioration. And I know one of the fears definitely is an economic deterioration, but I still am kind of in the camp that jobs number was not the end of the world. The unemployment uptick was not the end of the world. We're not necessarily in a recession right now, even though the SOM indicator of recessions based on the job market ticked. There's a big asterisk on this one, so we'll see. No, I don't look at pre-market charts after 9:30. Sometimes if I have to reference something like I just did, then I can pull it up real quick. But otherwise, I don't look at pre-market charts after 9:30. All right, popping over to the YouTube. So we had Oxy report after hours. I didn't see those numbers. Looks like it's trading up. Should make crude oil futures an interesting trade tomorrow. Yeah, so whoever was asking me about XLE just a little bit ago, you want to make sure that you study the Oxy report. Tate saying that Jamie Dimon said something similar on CNBC today and ended it with no recession from his view. It's interesting. It's interesting that he would say that. I don't really listen to Jamie Dimon. I caught a little bit of it just because we had the TV on here in the office, but I didn't capture all of it. I have a lot of respect for him as a manager, obviously, and JP Morgan has been my favorite bank that I've been touting for when you want to go long banks for a long time. But I haven't trusted his market-related calls, and I've almost felt like he says things that are more self-serving than what he actually thinks. to try to try to get the market or whatever to react than what he actually thinks, because he's been very wrong for like years now. Very wrong, very bearish. So it's interesting to see that, based on what you're saying, Tate, that he maybe wasn't as bearish and said that there was no recession from his view. Tends to be what I agree with. Back to the YouTube from Cyril with a question. The IWM chart is not looking so bullish anymore. No, it's not. What signals would you wait for getting bullish on the Russell? So it's the same thing. We are in a downtrend, right? Definitely in the spies and the Qs. It's actually, the IWM you can't even say is in a downtrend, because there has not actually been an established pattern of lower highs and lower lows in the daily chart. We just are back into our $200 area range zone. But for the spies and the Qs, we are definitely in a downtrend, at least on the small to intermediate time frame for the Qs. We are definitely in a downtrend. So to directly answer your question, what am I looking for to get me a little bit more bullish? It's a process, because I don't call tops and bottoms. I call out areas where I feel the market has a higher probability of retracing in the other direction, and then I have rules for how the retracement can become a reversal. So that's why it's like, on Monday, when we were as extended as we were into a day 3 on a Monday morning, I felt that was something. Spies are continuing to sell here after hours. I felt that was something that was a. Oh man, this market's scary. I felt that was something on Monday that was what I would call like a must buy. Like you must buy that. But what are you buying it for? You're buying it for a retracement, because I'm actually still bearish. But tactically, when the market was gapping down on Monday, I would much rather be long than short for the bounce, because again, most extreme downside extension I've almost ever seen in my career outside of maybe COVID. So tactically I'd want to be long, but big picture I am bearish, so it means that I want to be short. So what I do is I look for places to call out for the tactical retracement like I did on Monday, and then I have rules in place to watch if that retracement can become a reversal. There's patterns that build out that can change a market from going from a pattern of lower highs and lower lows to a pattern of higher highs and higher lows. So it's a process of building a more constructive thought process as the technicals do what they need to do in order to reverse. So, I will be constructively bullish, tactically bullish into a day 3 downside extension almost every single time as a rule. I will say, hey, sell profit as you are no longer extended into the bounce or into the time correction. But I will also often say, keep 25% of your position or something like that in case the retracement higher becomes a reversal. And calling a reversal ahead of time is one of the most difficult things you can do in trading, and it's very low probability, so I tend to not want to do that. But I'll say, hey, I think keep 25% of your position in case we get that higher low, or in case we get that inside and up or whatever that can begin to overshoot us up to create the reversal. Oh, thanks, Tate. If you can send me a screenshot of that, maybe you even already did. I'd like to see it. So I hope that helps to answer your question there, Cyril. And it's any of the indexes, really. Oxy beats on its EPS. Beats on its sales. Cool. I have betrayed my name and sold bearish premium in UVixy. I mean, selling the VIX, if you had the courage and bullets to do it on Monday, was a great trade. Could it be de-risking ahead of an Iran attack? I mean, of course. Markets don't like uncertainty. I mean, we spent some time on Friday last week, I think, because we were worried about an attack happening over the weekend. Like, what's the playbook on an attack? And generally, the thought process was a gap down on an attack is going to tend to be viable because the uncertainty's gone. That's what we've seen typically in the past and over the course of history. If the event happens, what would you be buying on a big picture gap down, Qs or IWM? I don't think it matters as much. In the same way, I didn't think it really mattered what you bought on Monday. Correlations have gone through the roof. It's not like this is not the market that we had in June and the beginning of July and even before that, where it was all about relative strength and relative weakness. Are they buying the Qs and selling the IWM today, or are they doing the opposite? Now everything's trading together. I don't think it matters as much what you buy or sell right now. Obviously, there's relative strength and relative weakness, and if you're looking at individual stocks in particular, names have news that still impact it. We are still in earnings season, by the way, which is just a whole nother layer of everything. But generally, correlations have increased so much that I don't think it matters. I would say, if anything, buy a few things. So in case one happens to be stronger than the other, you got a little bit of the Qs, got a little bit of the IWM, you got a little bit of both in the right circumstances, assuming you can afford the risk on all of it. What's up, Brandon? I wanted to ask you yesterday, when you first started trading, how did you handle your emotions? When I first started trading, I was very, very disciplined, and that helped me with my emotions. It was actually when I was getting more into like the earlier years of trading, but I wasn't brand new anymore, that I struggled the most with my emotional control. And emotional control, I would say, always has been my biggest weakness as a trader. So what I really had to work on at a certain point in time was figuring out what my emotional triggers were. What actually sets me off. Because even to this day, it's usually not P&L. I typically can handle highs and lows of my P&L very well. I lose control of my emotions because my computer doesn't work properly, or I got a through print triggered my stop, or something like that. That's the stuff that makes me blow an absolute gasket to this day. My internet drops, or I just it's my personality. I don't have the patience. So I needed to figure out what the things were that triggered me to lose control of my emotions, because losing control of your emotions can have very negative trading repercussions if you're trading in that type of mental state. So I did that, through a process of journaling, right? Journaling my emotions in my trades or in certain situations to figure out what those triggers were. The idea behind that being, if I know what the triggers are that make me lose my emotional control, I can try to recognize them earlier and get ahead of it before it even hits. So, that's what always helped me. And I definitely recommend keeping journals. So I hope that helps. From Kevin in the YouTube, in the Qs, I kept getting caught in the chop at the open. Yeah, this morning was really tricky, and that was one of the things that we said as a team was this morning is probably a morning to be a little bit more hands off, but if you got long swings on, especially if you're coming in flat, to be very hands off. If you're coming in with long swings, book profit on the long swings. If you've got a long portfolio, probably makes sense to start looking for some shorts to hedge that out / sell some of those longs. And that's exactly what we did. This morning into the gap up, I dumped a lot of long stock. I dumped a lot of TNA. I shorted the Qs, and it was all the right stuff. Though once again, this down sell here was more than I expected. I could see we couldn't break 449. Yeah, we couldn't break to the upside. Yeah, you got to know when to be a little more hands-off on your trading, right? That's one of the things that we always talk about is know when to sit on your hands and know when to go for it. And this morning was a day to actually be a little bit more hands-off. These patterns are rare. I have been some awesome short opportunities. Any feedback on how to recognize these patterns earlier? The tape felt deceptive, and I feel like this opportunity 3 to 4 times a quarter. Yeah. So how do you? So basically, the question is, this morning, this pattern in the beginning of the day here was very tricky to trade. And again, as a team, excuse me, as a team, I was working on it with everybody, and that's what was my game plan. I was saying, everyone, let's be a little bit more hands-off this morning. It looks like we're set for a tricky open. I think that the way that you figure that out is based on where the daily chart is. Today was just another morning where the daily chart was saying, whoa, like let's be a little bit patient here, and let's see what the market gives us after it satisfies the time extension. In some ways, the trickiest part of the day today was the bounce back at 10:40 to 10:45, because then it was like, all right, now we're not extended at all anymore to the upside on the small time frames, and we just broke back up, and it looks like we're going after highs. That could have been the setup that actually really broke us through 44.49 and got us going. But then we never actually broke those highs, and we started failing down at 11.10, and it just pushed us further. So I've kind of had a hoarse voice all day today. I talk a lot. Thank you, Michael. Yeah, good meeting you too. From Robert. Robert just giving Brandon some advice. Cool. Thanks, Robert. Back over to the VTF. Not seeing anything new. All right, I'm gonna end the meeting there. I gotta give my voice a rest. It's 5 o'clock. Hope everybody had a good day today. Hope no one got hurt in this down move. I think that we positioned ourselves and talked about it really well in the morning meeting. So have a wonderful night. We'll see how we gap tomorrow. We'll make a game plan and take advantage of the opportunities as they set up. Have a great night.